incorporate political risk into our investment process. So my question to you is, how do we incorporate political risk into our investment process?
Well, I think there's a couple of important things to remember, which is that you always have political noise out there. Most of the time, the economics dominate the situation. Occasionally, you get a situation where the politics becomes so large that you have to be factoring it in. But by and large, what it does is it contributes to more short-term volatility, more uncertainty. But it's always out there. I think investors should be resisting the temptation to trade around this. I think what is, as I expect it, as we look back on this in a couple of years, I expect that we will look back similar to prior impeachment type of proceedings, whether it was Nixon or Clinton. You had the market reaction was much more driven by the economics and the more market-related events that were happening at that time, whether it was an oil embargo or a bounce back from the Asian financial crisis. I think we are going to look back and say that trade dominated this story, which is why you're seeing the market reaction you are today on better trade headlines.
Yeah, and I think this week and yesterday in particular is an important reminder that politics here, whether we like it or not, are likely to take center stage for investors. And, you know, the recent headlines just add to the slew of risks that we're dealing with, whether it's U.S. and China, whether it's Iran and so forth, and healthcare debates. So this is going to be the new reality for some months to come and actually spill into the next year. So I think the developments of this last week really raised the risk spectrum and, you know, really raised probably the outcomes potentially around the next year's nomination process. So I think investors have to start factoring into their decision making. And, you know, to Meghan's point, you know, maybe this is not the time to, you know, to be out of the market because of this elevated volatility. But since we're playing spy versus spy, I guess I'll take the other side of your view. I think this is going to create some trading opportunities for tactical investors for sure.
Where?
For example, in cyclical stocks. You know, cyclical stocks have underperformed meaningfully in August, and they were on the path to outperformance in September. And then the last week or so, semiconductors have given back some of those gains. But if you think about U.S.-China trade developments, which I still think are on the positive footing here, and since the markets are looking through the last couple of developments, I think semiconductors, for example, is probably the prime candidate to be trading actively around this.